Good afternoon, traders, and welcome to the Hot Stocks Outlook for December 1st, 2016. So quickly getting into the last month of the year, very exciting opportunities taking place all throughout the markets. And this is just a really great time to demonstrate why it's so important to have tools that are consistently accurate and really give you an edge in the markets. Because, last month in November, we saw the elections, we saw the OPEC meeting yesterday, and this is never going to stop, right? It'll be FOMC next month, earnings reports, all these things. And, what's important is really having an approach that gets you positioned in the market really ahead of time before all this volatility comes into the market so that you can make sure that you're making money because of these events and because of these situations here. But what I want to do here is really focus on, the interpretation of these indicators. We have a few charts to go over here, starting here with Fastenal. And if you want to learn more about this technology, though, behind the VantagePoint Intermarket analysis software, certainly watch some previous videos going back in October and August, September months, and you'll see how this software really looks at things like the crude oil market, currencies, other related stocks and ETFs, and then generates really these predictive indicators to help traders make much better, more consistent trading decisions in the market here. So let's go over exactly how all this works here on these charts here with Fastenal. Now, on this chart here, you see we have candlesticks. Now, these are daily bars and candles. So the software works off of end of day data and then forecasts future price movements moving forward. Now, against those daily bars and candles, though, you'll see that there's two lines. There's a black line there and also a blue line. But let's focus on this black line for right now. Now, the black line that you see there is a simple moving average. Very, very simple indicator to calculate. All this indicator really does, all this black line is, and how it's calculated, is it simply takes the last 10 close prices from the stock you're looking at or whatever asset you're looking at, adds those all together, and then divides by 10, and it essentially just smooths out the price data a little bit over that 10-day period. Now, the problem with this indicator is that, well, one, it only looks at the one market that you're trading. So it has no ability to look at, hey, what's crude oil doing? What are related stocks doing? What are ETFs or currencies doing? And the other problem is that it only looks from past price. So it's really just summarizing what everyone knows has already occurred in the market. So it really has no edge or advantage there, really just smooths out what's been happening over the past 10 or 15 or 20 days, however long you want that simple moving average to be. Now, the other line, though, that we have on the chart, that blue line against the price data, that is VantagePoint's proprietary predicted moving average. We can see the indicator value right there. Now, what this indicator is doing is it's looking out at those global market relationships on, what's happening with crude oil, related stocks, ETFs, and it's generating predictive data and utilizing that predictive data and incorporating it into these predictive indicators. So what we have here is really a comparison between an actual moving average, a summary of what has already occurred in the market, that lagging indicator, and a prediction of where prices are expected to go moving forward. So traders really want to be paying attention to these crossovers between that blue and the black line because it really represents there's been a trend change in the marketplace. So once traders recognize, hey, that blue line's crossed above the black line, they can look to take positions along the market. Now, you'll also notice that there's another indicator here at the bottom of the screen, though, this being the VantagePoint Predicted Neural Index. We see here P index. Now, this indicator works in tandem with our predicted moving averages on the top, but very important to understand how this indicator works as well. Now, this indicator can only be a value of a 1 or a 0. So it's what we call a very binary output, yes or no, right or wrong. And what it's looking at is looking out 48 hours ahead of time. So it's really just a short-term forecasting tool. You can think of it 2 days, 48 hours, and it's really anticipating short-term strength or weakness in the market. Very, very short-term, just over a couple trading days, a couple candlesticks, a couple candles here. So whenever you see an opportunity where, hey, that blue line is crossed above the black line, and your neural index is really confirming, really getting that double confirmation that, hey, there's been a trend change, the neural index over the next 48 hours is up, expect prices to move higher, that alerts traders that, hey, it's time to go ahead and get involved with this market. Go ahead and start executing your strategies and get involved in the marketplace. Now, as long as that blue line remains above the black line, it's still forecasting the market to move higher. And when we look at the separation between the blue and the black line, a very important clue to really let you know, hey, how strong is this current trend. Now, we see here in the past 17 trading days, so really just since the beginning of November, market is up 18.7%, or about $7.46 a share. This being about a $40 stock, trading up at $47.50 currently. So, easily, 1,000 shares there at 500 shares. If you trade options, going ahead and buying some options when the market is forecasted to move higher, it's a really great way to make sure, again, that you're getting in at the right time so that you can take advantage of these tremendous opportunities that we've really seen all over the marketplace. About 19% move there. But let's go ahead and move forward, go through some more examples to really get the hang of how traders can utilize this information day in and day out to make their trades. So a JBHT, Hunt Transport Services here. Exact same thing. And this is why it's so important that, when you have tools that work the same way on a wide selection of markets, you can be really selective as far as picking, okay, well, here's my opportunity. I'm getting a clear forecast and really focus on those trades. So we see here with JBHT, again, crossover to the upside. Neural index there clearly up at a 1, saying, look, now's the time to get into this stock when it's at $81 a share. And what's so important here is, you really need to know, what should I expect as a trader over the next couple of trading days so that you can emotionally get, in the right spot, know when the trade is working and when it's really not. And so as long as that blue line remains above the black line, it's telling you that, look, the trend remains up, stay in this market. But at times you'll see the neural index pops down to a 0 there. So it's saying, look, there's going to be some weakness over the next 48 hours, but that blue line's still well above the black line, alerting you that, look, the trend is still up. Don't freak out and sacrifice your position here. You've got those 48 hours moving forward to expect that weakness. And look how quickly everything really adapts. That blue line way above the black line, neural index up at a 1. And these are the days where you just have to be involved in the marketplace if you really want to make that big money and big return on the stock. And so a lot of these stocks you'll see, when that volatility really picks up, the market just starts gapping and moving and it becomes very difficult to trade, which is why, you want to be getting in these things, way before the market has really realized, hey, this market is really getting ready to reverse. Go ahead and set those positions, down at 82, not, chasing it when it's already started to move up. But we see here so far, the market's moved up. Still moving higher, up about $96, $95 per share over about 22 trading days. Again, 18% move to the upside, $14 per share. So if you trade options, if you just go ahead, even buying just 100 shares here, you've made $1,500 on a single opportunity. So very important to understand, hey, when you can take smaller positions but capture very large moves in the market, really minimizes those risks in the marketplace, but still opens you up to tremendous trading opportunities, about 18% here in JB Transport. Now, moving forward, Baker Hughes, and I want to talk about this because if you watch a lot of these videos, you really understand how much I stress that, you need an approach and tools that are going to get you into these markets, understand, what those probabilities, what you should be doing, because when volatility hits the market, you're not able to trade it. There's a gap on the chart. There's really nothing you can do here. We see in Baker Hughes, so some of these oil service companies, VantagePoint forecasting, get into this market all the way back here at the end of September, early October. Blue line crossed above the black line, neural index up at a 1, saying this market is expected to go higher. So even as crude oil prices were still trending down, Baker Hughes is saying, look to get long this stock. Now, the stock was extremely volatile, very choppy, sideways action. You see this neural index was alerting weakness over these 48-hour periods moving forward, but the blue line remains above the black line, saying, look, remain in your long positions. You want to go ahead and hold these positions, and you see that this is the things that really start happening that make it very difficult to trade. And we see yesterday with OPEC getting a big gap there in the market, but obviously someone who bought this stock around $52 a share doesn't really need to worry about event risk. They can take profit over the course of the trade, come in and trail their stops if they want, but go ahead and make sure that they can take on essentially that event risk and make a lot of money when OPEC comes out, the market gaps up. But, wanting to buy this stock again, way back at the beginning of October, and a really great opportunity here, and crude oil still moving higher today. So about 28% move on over 43 trading days. Again, if you trade options or just buy the shares, 100 or 200 shares here, you've made, a few $1,000s. So again, those small positions, but understanding how to manage them over the course of a trend and a longer opportunity here. Century Bancorp, again, another great example here of why you need the tools to make sure that you're making good decisions, staying patient, doing the right thing. Here's your crossover in the market. You see, market just absolutely goes sideways, right? It's very difficult for traders to stay patient, keep their bearings, and stick with a trade. And so when you understand that, look, there's going to be some weakness here, expect some weakness over this time period, but as long as that blue line remains above the black line, the market's expected to move and go higher. Well, once that 48-hour indicator becomes bullish, you're certainly seeing that bullishness in the market. And that's where you really want to make sure that you've got that position on, because once it starts moving, there's no way you're going to make that 18 or 19% when you get in late and are chasing these things down. So again, about 19% move, almost $9 per share on, a $40 stock. Again, a few hundred shares here, really making you a significant amount of money over a short period of time. And you see the market really doesn't push against you very much at all. You really understand when you should stay in, and you're going to very early be alerted to, when the trend reverses and you need to go ahead and take profit, move on to something else. Last opportunity here, commercial metals. Again, very, very clear crossover to the upside, and the neural index there strongly up at a 1, saying, look, it's time to get into this market. And you see how, this is different from things like Century Bancorp, where we'd gone sideways for a long period of time. Neural index said, hey, expect that weakness over that 48-hour period. Here, you get your crossover, your neural index remains at a 1, and certainly 2 or 3 days later, you are gapping higher. And this is what I mean by, you just got to get in the position back here, on the 7th or 8th of November, once you're getting in past the 10th, it's over. The move is over. You've already missed it. So here's just another great opportunity thus far in the market. Over 17 trading days, market's up 30% or $5 per share. Easily 1,000 shares here. You're up $5,000 on a single trade. If you trade options, again, 10 contracts, however, whatever works for you in your style. But you got to know that, look, when the timing comes in, when you get these predictive crossovers alerting you that now's the opportunity when you need to go ahead and execute your strategy on the market, that's really how VantagePoint allows traders to consistently make sure that they're making intelligent trading decisions, again, based off those probabilities and not trying to chase down the news and all these other sorts of things. So again, guys, thank you as always for watching. I appreciate all your comments and things like that. As always, this has been the Hot Stocks Outlook for December 1st, 2016. Again, thank you all for watching, and bye for now.